Explainer: what is a bear market? New York, Oakland. The S&P 500 index, the most carefully observed benchmark for U.S. equities on Wall Street, has slid this year as inflation jumped to its maximum charge in 40 years. On Monday, a steep sell-off brought on by using fears that the Federal Reserve will boost interest charges at its meeting on Wednesday above prior expectancies left the S&P 500 down greater than 20% from its report high in January, confirming within the vernacular of many on Wall Street that it is in a bear market. But what does that term imply? What is a bull and a bear market? On Wall Street, the phrases bull or bear markets are regularly used to symbolize vast upward or downward traits in asset costs. But no longer all analysts outline bull or bear markets the identical way, and some traders use the terms loosely. S&P Dow Jones Indices defines a bull marketplace within the S&P 500 as a 20% upward thrust from its preceding low. It ends on the final peak before a next decline of 20%. It defines a endure market as a decline of at least 20% within the S&P 500 from its previous peak. It ends while the index reaches its low earlier than then occurring to set a new excessive. S&P uses closing fees for its calculations. Bull markets in both stocks and bonds are some distance more common than undergo markets. While the S&P 500 has notched 12 bear markets given that 1948, a few bull markets have lasted 10 years or longer. U.S. bonds, in the meantime, had been in a 40-year-long bull market that some analysts say has best these days ended. How do you know when you switch from one to the other? Bull markets in shares typically coincide with an expanding economic system or a rebound after a short-term stoop. Bear markets, meanwhile, regularly lead into a recession and ultimate until investors assume that the worst of the financial downturn is in the back of them. 9 of the 12 endure markets for the reason that 1948 had been followed through recessions, consistent with investment studies firm CFRA. How long do bear markets last? According to CFRA, S&P 500 bear markets seeing that 1946 have taken an average of 389 calendar days to backside, after which some other years to go back to their prior excessive. But there is a vast range. The remaining bear marketplace in early 2020 took only 33 days to backside, whilst the dot-com bubble endure market 20 years ago required 929 days to backside, according to CFRA. What are the defining features of this one? Previously noticeably valued increased shares have been badly punished in latest months via buyers worried that rising hobby fees will force purchasers to tighten their belts. Within the S&P 500 Generation Area Index, 91% of stocks had been currently down 20% or greater from their highs as of Tuesday, along with PayPal, Nasdaq, PYPL Holdings, which has now tumbled 77% from its record excessive final July. Among stocks in the S&P 500 Purchaser Discretionary Index, 88% are in endure markets, which includes Etsy, Nasdaq, Etsy, down 77% from its document excessive, and Carnival, NYSE, CCL Corp, down 68% from its excessive. Within the Communication Offerings Area Index, Facebook owner Meta Platforms has slumped 57% from its 2021 excessive, and Walt Disney, NYSE, Dis County has fallen 50%. The stock market's recent tumble has cooled valuations that during 2020 reached their highest degree because the dot-com technology. The S&P 500 is now priced at about 17 instances expected earnings. That's in step with its common ahead PE during the last 10 years, in line with Refinitiv information.